Hi, this is Nilus Mattive for Money Markets TV. When I launched my Income Superstars newsletter 5 years ago, the Federal Reserve's target interest rate stood at 5.25%, and 10-year Treasuries were paying about the same. At the time, most of us would have said those rates were pretty low. But here we are, half a decade later, and people would kill for a yield of 5%. Between then and now, Fed Chairman Ben Bernanke and company have pushed their targeted interest rate near zero, and they continue to dream up new ways to further manipulate the debt markets through endless rounds of quantitative easing. In other words, they've been robbing conservative investors blind. Because of efforts like Operation Twist, which policymakers extended 2 weeks ago, a 10-year Treasury bond now won't even give you 2% a year in interest. And you can even borrow money for a 30-year mortgage at about 3.5%. But even given these ultra-low rates, many investors are still plowing headlong into government debt of all kinds. The Dow Jones CBOT Treasury Index shows just how much demand there still is for 30-year, 10-year, and 5-year U.S. Treasury bonds. Investors don't seem to care that the Fed's actions and the resulting low interest rates are essentially stealing money from responsible savers and retirees all across the country, and using the proceeds to bail out banks, reckless borrowers, and a whole host of other people who hardly deserve the help. To make matters worse, this trend is virtually guaranteed to continue for a couple more years, at the very least. But there's absolutely no reason you have to accept low interest rates, especially when doing so simply gives Washington more money to squander away on blown budgets, bridges to nowhere, or misguided bailout policies. Instead, you can take the advice I've been giving for 5 years now, to invest in American companies that offer investors much fairer returns. In fact, there are dozens of solid dividend-paying stocks that have yields 2 or 3 times as high as Treasury bonds. Moreover, those dividend payments will probably grow with each successive year. That means a higher and higher yield based on your original investment. And the best part is that investing in these firms arguably does a lot more to stimulate the U.S. economy than all the government's failed attempts have. And as for the argument that choosing reasonable returns and growth over empty government guarantees is unpatriotic, well, don't believe it. In fact, voting with our investment dollars is perhaps the most American thing any of us could ever do. I'm Nilus Mattive from Money Markets TV. Thanks for watching.